In 2025, AI-powered algorithms will make financial decisions at lightning speed, saving banks up to $340 billion and influencing nearly $500 billion in revenue. These systems spot trends, manage risk, and execute trades with precision no human can match. Ignore this revolution, and you risk missing the biggest transformation in finance ever. Chapter 1: The AI Takeover. In 2025, AI is no longer just a futuristic concept in finance. It's the driving force behind most financial market operations. Over 85% of major financial institutions now rely on AI-powered systems every day. Just a few years ago, this number was less than half. This rapid adoption shows how AI has moved from hyper to reality. Why has AI taken over so quickly? It's simple. AI can analyze massive amounts of data in seconds, something no human or traditional computer system can do. This allows financial firms to spot trends, execute trades, and manage risks faster and more accurately. Banks, hedge funds, and trading firms use AI to make decisions that move billions of dollars in milliseconds. These AI systems don't just automate tasks, they learn and improve with every trade, constantly getting smarter. If you think AI is just a buzzword, it's time to update your thinking. Chapter 2: Reading the Market's Mind. How does AI predict what will happen in the markets? The answer lies in predictive analytics. Traditional analysts rely on charts, reports, and news, but AI takes this to a new level. It processes enormous data sets, historical prices, company earnings, economic indicators, and social media chatter. Yes, social media. AI uses natural language processing to understand investors' moods by scanning tweets, news articles, and online forums. For example, if a CEO makes a statement that worries investors, AI detects the negative sentiment instantly and adjusts its predictions. This ability to read the market's emotional state gives AI a huge advantage. It can forecast volatility, identify emerging sectors, and predict how political events might impact stock prices. For traders, this means having a constantly updated, real-time view of the market, helping them make smarter, faster decisions. Chapter 3: The Brains Behind the Bots. At the heart of AI's power are machine learning models. These are algorithms that learn from data and improve over time without being explicitly programmed for every situation. There are different types of machine learning. Supervised learning uses labeled data to teach AI. Unsupervised learning finds hidden patterns without any labels. Reinforcement learning is like trial and error. The AI tries different strategies and learns which ones work best. Reinforcement learning is especially important in trading. It lets AI simulate thousands of scenarios, learning which moves generate the best returns under different market conditions. Top hedge funds like Two Sigma and Renaissance Technologies rely heavily on these models. Their AI systems analyze complex datasets, spotting patterns humans might miss, leading to more accurate predictions and better trades. Chapter 4: AI-powered risk management and fraud detection. AI isn't just about making money, it's also about protecting it. Risk management has always been a challenge because markets can be unpredictable. AI helps by constantly monitoring portfolios and market conditions, spotting risks early, and suggesting adjustments. Fraud detection is another area where AI shines. These systems analyze billions of transactions every day, looking for unusual patterns that might indicate fraud or insider trading. AI also improves credit risk assessment by analyzing a broader range of data, including alternative sources like payment histories and social behavior, leading to fairer and more accurate lending decisions. All of this means safer investments and more stable markets. Chapter 5: Building Smarter Stock Prediction Models. Stock market prediction is notoriously difficult because so many factors influence prices. Traditional models often assume simple cause and effect relationships, but markets are far more complex. That's why AI uses advanced techniques like long short-term memory neural networks. These models are designed to handle sequences and time series data, making them perfect for analyzing stock price movements over time. LSTMs can remember patterns from months or even years ago that still affect today's prices. Combine that with real-time data, and you get a model that constantly updates and improves forecasts. However, it's important to remember that no model is perfect. Unexpected events, like geopolitical crises or natural disasters, can disrupt markets in ways AI can't predict. Chapter 6. Native Hedge Funds. In 2025, AI-native hedge funds are no longer a niche, they're a major force in finance. These funds run almost entirely on AI, automating data analysis to trade execution. Unlike traditional hedge funds that depend heavily on human judgment, AI-native funds use self-learning algorithms that adapt instantly to market changes. What sets them apart? They process vast and diverse data sources. Everything from satellite images to social media sentiment find trading opportunities faster than any human team could. These funds also use advanced AI models to simulate market scenarios and stress test portfolios, helping them manage risk more effectively. The results speak for themselves. AI-native hedge funds often outperform traditional funds by significant margins. And with innovations like tokenized hedge funds, even everyday investors can now participate in AI-driven strategies, sharing profits, and voting on key decisions. Chapter 7. AI for Everyone. AI isn't just for Wall Street anymore. In 2025, AI-powered financial tools will become accessible to everyday investors, leveling the playing field like never before. Robo-advisors use AI to build personalized investment portfolios tailored to your unique goals, risk tolerance, and financial habits. These platforms continuously monitor the markets and automatically rebalance your portfolio to keep it optimized. Credit scoring has also been revolutionized by AI. Instead of relying solely on traditional credit history, AI analyzes alternative data like utility payments, rent records, and social behavior. This means more people can qualify for loans and financial products, expanding access to credit. Budgeting apps powered by AI analyze your spending patterns and suggest smarter ways to save or invest. Virtual assistants provide instant financial advice, answering your questions anytime you need. Chapter 8. Ethics, Data, and the Human Touch. Of course, AI's rise in finance isn't without challenges. First, data quality is critical. If AI models learn from biased or incomplete data, their predictions can be flawed sometimes with costly consequences. Ensuring clean, unbiased data is a constant challenge. Second, transparency remains a big concern. Many AI systems operate as black boxes, making decisions that even their creators can't fully explain. This raises important questions about accountability, especially when billions of dollars are involved. Third, job displacement is real. As AI automates routine tasks, finance professionals must adapt by focusing on skills AI can't replace, like judgment, creativity, and ethical decision-making. Finally, regulations are struggling to keep pace. Governments worldwide are working to create rules that protect consumers and markets without stifling innovation. Balancing AI's incredible power with responsibility, transparency, and human oversight will be key to building a trustworthy financial future. If you enjoy this video, subscribe and share your thoughts in the comments. Thanks for watching.